It's the best time of the week. It's time for Top That Trade. Joining us for that, Knuckman, the Chief Market Strategist at BullseyeOption.com, and Flynn, a Fox Business News contributor. Round number one of our trader game, guys, Black Swan swimming. Black Swan events are when the market sells off hard. Well, so far, funds that hedge for big sell-offs in the market are making money. Are you down with downside funds?
Well, there's always money to be made. It doesn't matter if the markets move up or down. I think being too invested to the downside, you've got to learn to take your profits very quickly. As we've seen, the markets have big bounces and they happen fast, and that's happened for more than a decade. Someday, maybe it'll be straight down. But they've proven that it doesn't make money over the long term. I think it's probably easier just to use options and buy puts and have that kind of insurance for 6 months out, and that way you can sleep well at night.
That swan has swam away. I'm telling you, that was the play. I mean, how many black swans can you possibly have? War in the Ukraine, go on and on and on. And to be honest with you, I think a lot of the bad news is behind us. We had one of the worst quarters we've had in many, many years. I think the next quarter looks a little better. We're going to have clarity on interest rates. And even though people are fearful of that, it's going to hold us back. I think clarity leads to better markets. And I think we're going to see some strong profitability over the next couple of quarters. So I would say sell the swans and buy the bulls.
Round number two, the chicken or the egg. What commodity cash do you hope to make with the current poultry problems, including bird flu?
I think the avian flu, there's a lot of ways to play that. You can go to either Tyson or Sanderson Farms, because we do think that the meat market is in a strong uptrend. We've done pretty well on some hog spreads, believe it or not, playing this, and the seasonal patterns have been exclusively strong. But you can also play pharmaceuticals. You look for the companies that have a possibility, maybe a pharmaceutical ETF, because they have to cure this thing, or at least try to.
All right, when it comes to chicken, you can't get chicken from Tyson and Sanderson right now. There's no birds out there. So that's a short-term problem. Now, it only takes about 40 days to repopulate, so that can come back quickly. The play, I think, still is in corn. Corn's at about $7 right now for the December contract, the stuff that they're going to plant very soon. And you got to remember, the 2012 high was up at 8. So there's still more upside in corn, because you can't feed a chicken unless you have the corn.
You can't feed it if it's dead either. So I'm just saying.
No chickens?
No, there's a tight supply. Yeah, there's a tight supply. But that's why I like the stock long. When you're selling a commodity that you don't have a lot of, as soon as you get it, you'll make a lot of money.
Round number three, buy bias. Analysts have the most buy rating since 2010. Name the stock that you want to buy.
Well, what's interesting here is that half of the stocks on the list here have buy ratings, but half of the stocks in the S&P are significantly off their highs, and down 50% or so at one time. Now, that doesn't mean there's not money to be made. The stocks that they picked were stocks in the NASDAQ. They picked Alphabet, Amazon, and Microsoft. I like all those, but I'm not smart enough to pick which one. So I would just go with the Qs. Now, the Qs have dropped. They dropped 3,750 points from their high to their low. So that targets an upside of 20,500, which is 40% up above if it happens like it's happened every time in market history.
We were talking about the avian flu. They're talking about, more COVID cases coming on the world, more people catching COVID. And this is one of the stocks that early on really did well during the COVID. It was Clorox, right? Clorox, because everybody's washing their hands. That stock has been done incredible. So that's one that they recommended. That's one I like. Snap-on Tools was another one. I like that company, but the problem is supply chains. But overall, I still think it's a good long-term stock. And of course, energy, we've been talking about that a lot. They've had a pretty significant pullback recently. This might be a good time to lock in on that good old-fashioned oil and gas fields. I like Chevron, Exxon, and those are two that I really like on this pullback.
Here's your bonus round question for today. In honor of the Masters, the Waffle House, headquartered in Georgia, is making the following play: selling waffles with divots, giving away golf balls, or selling Waffle House golf shoes.
Ooh, I would get those golf shoes if they had them. So hopefully number 3, if they have those, I need some.
I think waffles with divots sounds like fun.
Waffles already have divot.
I know.
Alan wins. Those golf shoes are off-white, the same color as waffle batter. There you go.
Oh.
Ooh, okay, beautiful. All right, terrific.
Christmas, give me some Christmas
And if they
presents,
don't
people.
fit, you can put a waffle in the bottom and it gives it a little cushion. I'm just saying.
Bill, only you would come up with that idea. Go to businessfirstam.com for where to see our show on TV.